Welcome back to Ferocious Education, this is Ed. Today we're going to be talking about Palantir, PLTR. If you'd like to know more about the profitability of PLTR and when they might actually become profitable, watch it to the end. Let's jump right into this one. So I'm going to go through a bit of due diligence and then technical analysis. I've done a good amount of videos on this one before, you'll find it in the description below. But just to give you a around 5 second introduction to Palantir, they do data analytical solutions, although they're a technology company, not a data analytical solutions company, and they have almost 3 different products: Palantir Gotham, Palantir Foundry, and Palantir Apollo. And to sum it up, Palantir Gotham integrates, manages, secures, and analyzes all your enterprise data. Palantir Foundry amplifies and extends the power of data integration, and Palantir Apollo is an SaaS platform. And so you can also go ahead and book your demos for this one here, and you're able to see it into the demo section of them. So it's palantir.com/double-click, and you're able to register for the next demo on April 14th, 2021. And they also have a promotional video there as well. And the way to go to there is Newsroom, Demo Series, and you're able to go jump in towards this video. And once that is done, you're able to go ahead and register for that demo. And so they're going to be showing a bit of different programs such as Gotham, Apollo, and Foundry in this demo. And in that sense, you're able to see what you're actually investing in. There's not a lot of things going on in this video, but quite a nice animatics in it. Anyway, you get to see Palantir Foundry Technology, Gotham, etc. Now, we don't see much in terms of news updated except the last one, which comes in towards bringing carbon dioxide neutral with the agreement with Ferocious, which I did go over in the last video. But they also have some of the press releases in terms of the last quarter. I did go through that in the last video, so I'm not going to bore you again once more with this, but I want to go through a bit of a part of it in terms of the financial updates. So in 2020, they generated $1.093 billion in revenue, which is up 47% from 2019. However, we need to take a quick look in terms of their net profitability. There's been a lot of questions and a lot of folks have been telling me, hey, is this one profitable or not? And so this video should help you come with that conclusion. And so we're looking into here, they have different contracts, government contracts in terms of revenues. I did go through this once time before. And in terms of adjusted operating income, you see that adjusting operating income in 2019 for quarter 4 was negative 70 million. And then in quarter 4 2020, you're looking at 104 million. And in terms of adjusted operating margins, you're looking in 2019 in general at 334 million negative and 190 million positive in 2020. And so the financial updates here comes towards total deal value of $2.8 billion of total deal value as of December 31st, 2020, up 24% year over year and 31% year over year on constant duration basis. Dollar weighted average contract duration was 3.6 million. And that's 597.4 million of remaining performance obligations, up 124% year over year. And there's again the 49% growth year over year. And the thing that I want to dive into was the outlook. So for long-term orientation, you're looking into a revenue of 4 billions or more in 2025. That's a 5-year outlook. And in quarter 1 2020, they're looking for a revenue growth of 45% and adjusted operating margin of 23%. Full year, they're looking at an additional 30% revenue increase from 2020. And in the appendix, they do show a couple of things. For instance, reconciliation of losses operation to adjusted operating income or loss adjusted operating margins. You see their loss from operations, you're looking at negative 156 million. And it looks like what's keeping them afloat actually is their stock-based compensations, etc., raising money in the market, etc. And so in that sense, that's what's keeping them afloat. And if we were to go ahead and compare their financials, we're able to see that they're in fact not net profitable on their own. And that is seen here on Yahoo. What you're able to see is that their their total revenue is somewhere around $1 billion in 2020. That is a jump off around 47% again from 2019. And they're estimating within the next 5 years, you're probably looking at somewhere around $4 billion. And so that will balance the sheets a little given that they keep their expenses the same. But if you look into the general net incomes, etc., you're seeing that they are negative almost $1 billion here. Things aren't looking so good in terms of that, but with additional income, additional interest, you might have net profitability within the next 5 years. And here on Google, this reiterates this information. It shows revenue is actually $1.09 billion in 2020. However, the net income was negative $1.17 billion, including the money that they have raised throughout the year. And in 2019 as well, things weren't looking as good. In terms of revenues increasing, but so is net revenue as well. It's decreasing. So things are looking quite interesting here. In terms of the quarters, you see their massive loss on quarter 3, and again includes towards raising more money, etc. And in quarter 4 2020, you see that this kind of margins are getting a little bit better. It's negative 148 million only in loss. And so they are still somewhere on that road of being net profitable, and you probably will see it within the next 3 to 4 years. Now, other thing I need to cover today is a couple of things. First, their projections and forecasts in the next 12 months based on CNN. You're looking at a high of $40, around 85.2 up potential, a median of 23.50, around 10% higher from where it is right now, and a low of 15, which is 30% lower. Currently, in terms of rating, it has 2 buy, and then 2 hold, and 4 sell as of February, so March still not updated. Now, the current quarter says 4 cents per share, but again, I don't think it's actually meeting the net income itself. That's just more gross. So we're going to take another look as well in terms of institutional buyers before moving on towards technical analysis. And if you'd like to see more contents like this, make sure to subscribe and notifications on. Feel free to share it and drop a like to this video. It helps my channel a lot. And if you'd like to join our Discord, the server is in the description below and it's free. So in terms of institutional buyers, institutions are loving this one continuously. However, JP Morgan Research Market Neutral Fund has shorted the stock at negative 2,000 shares. Quite interesting, but I think this is more of hedging off their own 170-something thousand shares. So they're doing a little bit of hedging there from my understanding, but generally in March, they're adding hundreds of thousands and almost millions of shares additional. Look at Dumac, they added around 2.9 million shares off Palantir. Now, granted, at the start of March, we did have a decrease in position by Catalyst Private Wealth, but generally speaking, there's still an inflow of institutional buyers, and this really shows a really good potential in the company and being bullish in the future as well. Now, from a 1-week perspective, things weren't looking that good because the indicators aren't filled yet, so we need to look into 1 day. So in 1 day, we'd look into the price points, and we see above that 28 level, that's where things becomes bullish. Now, there's this thing called a bearish trading action zone, where bearish reversals are more likely, and you get to see it played once before, so it needs to escape that and hit around 25.50 and above. Now, ADX doesn't show anything. The stock is highly oversold, which means a correction means bringing in more buyers, raising up the price. And MACD here shows a negative reversal / accumulation, and we definitely need to look into significant supports and resistances. Now, if we were to look into the moving average band, we're seeing significant resistance sitting at 2662. 2420 is the middle average band, and the bottom is at 2178, roughly around there. The Bollinger Bands and the moving average bands are roughly the same, so there's not much difference going on here. Stochastic fast and stochastic slow are both showing that this one is slipping down a little, so be very, very careful when it comes to that. Now, in terms of the chart itself, Fibonacci retracement shows currently at $45, going all the way down to around $890. Significant resistance currently is sitting at 2271, 2698, 3124, 3732, and 4505. Significant supports are 1744 and 891. And if you were to go ahead with a price line action, you see the significant support currently lies at 2163. Following that is $21. Following that, those are supports by the way, 1858, 1603. Looking at 1405 and 1105. Significant resistances are sitting at 2248. You're looking at 2480. Above there, you're looking at 2648, 2893. You're jumping up to 3131, 3640, and then 3826, and up to 3956. Comes to the question to Ed, what do you think about this one? Well, for a long-term investment, this one is a really interesting one because it looks like institutions are loving this one. They're picking up a lot more on it. However, they're not net positive. So in a future longer term, I definitely love this stock. But when it comes in towards shorter term, we might slide a little bit down and accumulate somewhere around that 2180 mark. Things were looking very interesting here, and definitely it is a rough place. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.